Hey everybody, Courtney Smith here with our January 17th edition of Wall Street Winners. Let's dive right into it here. Let's get into it. So the market, it rallied a little bit early in the week, dropped a little bit late in the week. This is the S&P right here. But there's a lot of encouraging short-term indicators came into play this week. So for example, when we look at the S&P here, one of the things that I've been highlighting recently has been the weakness of the purple predictor. Purple predictor had been weaker than the price action. Now all of a sudden, it's a little bit stronger. That type of divergence usually means the price is going to rally over the short term. So look for this coming week to be a reasonably good week, particularly on Tuesday. Tuesday, write it down, is going to probably be a good day in the market. Over here, not much going on. Let's take a look at the NASDAQ. Same thing. Look at the purple predictor. It's way up above the price action. So what's happening is that the smart money is using this dip to buy NASDAQ stocks. So they were overvalued up at 16,000 and change. They're cheap down in 14,000, under 15,000. That's really what the smart money's telling us right now. So this is encouraging as well. Now, I've lowered the buy point. I had the red line here is where I will say that it's shifting to bullish seasonality. I had it way up here, but now we've got some significant highs here. So if it breaks above here, I'll say we're in a bullish seasonality. I'm not really expecting that, quite frankly. I think this market's going to go sideways in a very choppy way over the near term. So, but still, nonetheless, if it breaks significant highs, we have to say that the bullish seasonality is back in play. If we look over here at Stock Traders Almanac, this is from them. You can see that, generally speaking, the next 2 weeks are negative, a little bit strong this week, and then next week we would be down a bit. I'm just looking here. Yeah, that makes perfect sense to me. So look for this week to be okay, next week to be not so hot. And then you can see, then we'll get a rally and then a dip. It's not going to be an easy year at all. Now, what's really happening, though, and I've been highlighting this, is that people are taking money out of the bond market and putting it into stocks. So there's no shortage of money to buy the stock market. And that's one reason why the stock market is as strong as it has been. I mean, we just made new all-time highs just a few weeks ago. So whenever something's making new all-time highs, number one, you don't have crashes, so we're not going to have a crash. Could we have a bear market? Sure, of course. We can always start a bear market. All bear markets start at the peak of bull markets. But what's happening is we've got a lot of cash flowing into the stock market. And it's coming from several main places. Number one is the bond market. That's what this chart shows. Number two is just constant new money going into mutual funds, 401ks, etc. That's coming from retirement funds. And then number three, of course, your $1,200 check. A lot of people put that into the stock market. Now, some of those put it into Bitcoin and GameStop and places that they shouldn't do it. They gamble with the money rather than using a strategic plan to make money in the market the way we do here in Wall Street Winners. But this is important bullish factor for the market. And at the same time, we're seeing risk. The market doesn't want risk. So this is why we changed our strategy to get into utilities, consumer staples, financials. In other words, less risky stocks. So the money's flowing out, and we have to go to where the money is flowing into, and that is our less risky stocks. And that's worked out well for us so far. Global shares, who cares? All right, now, the yield curve bounced up a lot here over the last couple of weeks, and we broke to a new high. This is actually kind of bullish for the stock market. Because generally speaking, the more wide the yield curve, or more positive the yield curve is, the more positive it is for the economy and for the stock market. So I'm going to count this as a positive. Bond market, under pressure. We're going to break to new lows. That seems pretty clear. We've been telling you about this bond market now for weeks. It's going to continue to remain under pressure. Our bond key factors, holy moly, they're all pointing up. Here we see up here, that's the CRB index. Then we have the price of gold. The blue line are 10-year treasuries in Germany, and the green line are 10-year treasury yields in the U.S. All of our indicators for bond yields are going up. So guess what? Bond yields are going up. All right, the dollar came down, which is a bit surprising to me. I think it's really on the back of the poor economic news. We've been telling you about the poor economic news weeks in advance of it coming out. We're going to see the economy slow significantly this year, maybe to sub 1% growth. And that's going to hit the dollar here. And particularly since it hasn't been expected, everybody was really looking at the numbers of the economy in the past, and they basically said, oh, well, that's going to continue on ad infinitum. But of course it doesn't. So now we're seeing the reaction to that. Gold. You know, so I did a special report for some of my elite customers. And I said, why isn't gold rallying? We have inflation at incredible heights, but we're not seeing this. We're not seeing gold go up. And here's the reason. I think there's two reasons. Number one, as I showed you a few charts ago, interest rates are going up. And they're going up faster than the rate of inflation. So real interest rates are going up. And that's bearish for gold. Number two, the market might be sitting here thinking, well, if the economy weakens down to below 1%, and by the way, Germany just went into negative growth for 1 quarter, so it's not a recession, but I think they're going to have a recession in Germany. So if all of a sudden the big Western economies are weakening significantly, then maybe generous Jerome Powell was right. And maybe this inflation is going to be transitory. So I don't think that the gold players are wanting to step into the market and get aggressive with rising real interest rates and a slowing economy. Our gold key indicators, though, for the first time in, I don't know, months, they're all moving up. So we should see some bounce higher. But fully paid up members, I show there's one other indicator for fully paid up members, which unfortunately dashes this bullish picture. And if you're not a fully paid up member, really, what's wrong with you? Okay, crude oil continues to bull up into the mid-80s, as I told you it would. I now think we're heading to 90. The problem is not so much a lack of supply, as demand has been good. Demand has been good. And what we're seeing is some producers are having a hard time getting their oil into the market. And I'm talking about places like Libya. Libya has a civil war going on there, so because of the civil war, sometimes they can't get any oil anyplace because there's bombs, okay? So you see what I'm saying? It's really third world countries like Libya that can't get the oil to market. Obviously, Saudi Arabia, the U.S. can get the oil to market. And then finally, Bitcoin, we finally saw some stability here. And interestingly enough, the purple predictor started to move higher here. So this is the first real bullish sign I've seen out of Bitcoin in some time. So I can't be as bearish as I have been in the past. The purple predictor shows that smart money is buying Bitcoin down here at 42,000, 40,000 really. And they see that as cheap. So I think the best thing is, if you've been short based on our recommendation, I'd probably cover the short position, and I would probably do nothing right now. If we break to new lows, get short again, but we may be setting up for another buy signal here. Okay, freebies, love having you here, but of course, you should subscribe to the fully paid up member version, so just go to Wall Street Winners, WSW2021.com, and sign up.